Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist for WealthPress. Today's Thursday. It's January 26th. We've got 5 more days till the end of the year, till the end of the month, and then we've got only 11 months left. Time just runs away from me. If you told me it was the first week of January, I would probably believe you right now. I have no idea where time goes. Anyhow, it's about 8:13 in the morning. The market is going to gear up to open about hour and 17 minutes. I still have my mathematical skills somewhat correct. And as you can see here, the Dow's up, 82 points. The Nasdaq's up 120 points. And it looks like we're reversing what we saw yesterday morning when the market went higher. It looks like the market is doing everything humanly possible to convince investors and traders that it wants to go higher. But I'm going to tell you something. Not everything is the way it appears to be. For example, well, first of all, before we get into all of the nitty-gritty, I just want you to see what we've got on the deck today. Durable good orders, GDP, international trades in goods and services, jobless claims, wholesale inventories, and new home sales. And all of that is coming out. Well, not all of it, but most of it is coming out before the market opens. Actually, most of it is coming out in about 16 minutes. The biggest thing you need to pay attention to in light of all of this is the bond market. Now, the bond market can get a little crazy, but right now it looks like it peaked out right here near the 108.84 level, about a point below the price I wanted to sell it at, but that's for another time and day. The point is, it looks like it's going weaker right now, and it looks like it's going to come off. If it comes off, it's going to put more pressure on tech stocks. If it rallies, it'll put less pressure on tech stocks. But be very, very, very cautious because this is a lot of data. And the GDP is a very, very important report. Let's talk about all of this after we talk about earnings on deck, because I want to review what already happened, and I want to talk about what's ahead. Today, you've got Visa. Very important news announcement from Visa. They're going to talk about whether they're going to beat their 11% year-over-year EPS gain. You've got Alaska Airlines, you've got American Airlines, you've got ADM. Notice that we're starting to become a little more broader. You've got MasterCard, but you've also got Nokia, you've got Northrop Grumman, you've got Nucor. Let's see here, you've got Sherwin-Williams, a lot of airlines, energy stocks, Xerox. So the markets, the earnings that are coming out are becoming a little more broader. Now, I don't want to get deep into earnings, but the earnings picture is not a great picture. And we're seeing more revisions to the downside. Next week, we'll get a much bigger picture. We'll have about a quarter of the earnings out of the way. But so far, the numbers are really, really negative. They're not fall off the cliff negative, but the revisions, I think only 66% are beating the beaten down EPS, and that's like one of the lowest numbers in ages. I don't want to give you a misquote, but it's not a good number. Let's talk a little bit about Tesla. Now, Tesla had earnings yesterday. Tesla came out with earnings, and right now, the stock is up quite a bit. It's about up 6%. But I want to put something in perspective for you. The stock, this is the 200-day moving average right here. I believe it is at least. Yeah, it is. Look how far the stock has to go to get to the 200-day moving average. My opinion is that the stock is going to back off. It's already overbought. It's going to maybe huff and puff, maybe have another couple of up days, and then it's going to revert back lower because it's already grossly overbought. And typically, when we get to this overbought level, you're not going to see too much. Let me see. Let me just put this to 5 and put this to 20 and put this to 80. Because of the volatility, we need a little more dynamic, shorter term and dynamic. And look at how overbought this is. Matter of fact, we haven't been this overbought on Tesla since right here. Now, interestingly enough, when you look at this, look at the S&P 500. It's doing everything humanly possible to convince you that it wants to break above the 200-day moving average, which is where it is right now. I don't think that's the case, and I don't think it's going to break. I think you're seeing something very, very similar to this, where the market tries to convince you, does everything humanly possible to convince you, and then backs off because we're still driving below the 200-day moving average. Also, if you look at the QQQ, you'll see we're way below the 200-day moving average. We're actually right here. So I think we're going to bounce back down and come off of these levels. I think the market is trying to sucker in all the weak hands to go long right now. But again, if you look at momentum levels, which we often look at, you will see real estate, 94th percentile, but only 45th percentile. That's not happiness right there. Communication services, 88th percentile, only 52 percentile in the 200. That's not a bird that flies. So there's a lot of inconsistencies right now with this market. Like look at communication services. I want to show you this. Look at how overbought it is, so you could see it from my perspective. Look at how overbought it is, right? Now look at communication services and moving average. Hold on. See that? That's the 200-day line right there that it's violating. And do you think it's really going to go a lot higher? I honestly don't. I think it's going to cool off right now. I think it's going to cool off. So I think the next couple of days, maybe even today, we're going to start starting to see some downside trading action. And again, we've got a lot of mixed earnings, a lot of bank stocks, a lot of airlines. You've got to be very, 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 very cautious right now. Now, let's talk a little bit about what the opening bell and what to expect based on the news announcement, and I'll kind of give you the summarized versions. So the benchmark indices were mixed yesterday. You saw upside on utilities, technology, and industrial. Now, utilities, technology, and industrial, losses in utilities, technology, and industrial, but we saw gains in telecom, consumer services, and financials. Now, here's the thing. Utilities is much more related to telecom, consumer services, and financials than technology and industrial. So that's very, very odd. And again, earnings. Shares of Microsoft recovered from their losses yesterday after they reported mixed quarterly results and released an underwhelming outlook that fueled further growth concerns. Boeing, a major Dow component, reversed losses to close about 0.3% higher after the plane maker posted surprise losses but reported its first positive cash flow since 2018. Thank God for small favors, because a lot of money is going into these defensive stocks right now, military, government. Alphabet fell over 2% after the company cut another 1,800 jobs. Meanwhile, Tesla gained over 7% after the company reported record quarterly revenue and topped EPS. Elon Musk's upbeat commentary on sales and production outlook during the earnings call also boosted the electric vehicles stock. Don't hold your breath for that right now. Not expecting anything crazy there. Today, fourth quarter earnings results have shifted into overdrive. A lot of stocks coming out. You've got Visa, MasterCard, Intel. Now, analysts are expecting the earnings to drop 3%. From beginning of the year, it was at 1.6%. So we're literally expecting earnings, and every day this number seems to be getting worse. We were at 1.6%, let's see how many days ago, 26 days ago, and now we're at 3%. That's bad. That's not good. That's nothing to get excited about. All eyes today are on GDP report that's coming out, and they're looking at 2.6% quarter over quarter in comparison to 3.2%. The core durable goods, they're looking at new figure to be negative 0.2. We also have initial jobless claims. I'm not really worried about that because the number has been holding right around 200,000. It's been one of the best performing sectors, and it'll also give the Fed more juice to increase rates because people are working. They can withstand it. Durable goods orders are expected today. 2.5 up for December compared to previous month of negative 0.1. New home sales today, not expecting the number to be all that great. They're expecting 617,000 compared to 640,000. In Europe, things looked better than expected. They had positive earnings from Nokia, ST Microelectronics, Sabadell. They came out good, so we had a rally in Japan. Pre-market, Seagate. Keep your eye on Seagate. It's up hard this morning after they reported earnings. Chevron rose 2%. Energy stocks, which I'll talk about in a second, are doing well. IBM didn't do well, and Pfizer didn't do well. I was really hoping that IBM will do well, but they said they are laying off 1.5% of their workforce. That's not happiness. So we got to be very, 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 very cautious on that. Looking at the energy sector, we still have some upside. Notice we're above the 200-day moving average. This is all-time highs right here. Look at where we're at right now. Most sectors are looking the same, but they're below the 200-day moving average, where energies are not. So I'm still very bullish on energies, and if we go above the current level, which I think we will, maybe not today, but I think we will, we're going to see some more upside. Now, looking at breakouts, 256 versus 223, I think we're overbought and we're coming off. I'm not seeing anything spectacular in this market right now, not even close. I'm actually seeing a lot of volatility and some potential downside. If you're looking at the sectors, energy, material, financial, and industrial, stick to these four. You should be okay. Communication services, technology right now, very, very squirrely, and I think we're going to see these two. I'm about 90% sure we're going to see these two come back down here, and consumer staples and healthcare start coming up. Basically, communication services and technology needs to be at the bottom, not at the top, especially with consumer discretionary still being here. I'm seeing this as a earnings volatility and not a major shift in the market. So I still like energy. Now, today is Thursday, and on Thursday, I usually give you my favorite ETF and option pick. And guess what? Today, it's definitely energy sector. So if we look at the energy, XLE, energy stocks are doing good. They're not bucking the trend. They're still moving higher. Look at where we're at. I actually like this a lot. I'm not bearish at all on energies. I told you we would start making a comeback, and we are. And I would be looking right now at the 80. You want to give it some time. I don't know what your time frame is, but probably want to give it some time. And the options are not expensive. You probably want to go to the 91 strike price, 91 strike price, maybe 92. Obviously, the spreads will tighten up after the market opens, but there's plenty of open interest and liquidity and volume on these. Right now, markets are very, very shaken up. They're very mixed up. They don't have a predictable trend. Sectors are all over the place. I mean, let me just show you this so you can see why it's been very hard to trade. You've got utilities at the bottom. Energies are at the top. Communication services are here. Consumer discretionary is down here. It's a huge, huge fragmentation. And typically, fragmentation gets solved when the market corrects, which is what I'm seeing. So be very, very, very careful. Now, before I let you go, I've got something big for you. With how news-driven and unpredictable the markets have been, trading has become more difficult than ever before. It really has, especially with these sectors doing crazy stuff during earnings. And that's why I love my quantum indicator. It uses historic data to help me decide where the market is likely headed next. And it doesn't matter whether we're in a bull or bear market. The quantum indicator signals long and short trades, lots of long and short trades, which is critical in the current environment. I'm holding a very special presentation at 11 a.m. today Eastern Time. That's right, 11 a.m. Eastern Time today. Don't miss out. Thursday, the 26th, 11 a.m. Eastern Time. Don't confuse it with Central Time or Pacific Time. And it's critical that you attend during the current market climate. We've got a lot of volatility. It's something I've been waiting to do for a while. Timing is right. And I'm going to show you what it's signaling right now and how you can add this indicator to your trading toolbox. Click the link below. Reserve your spot now. I'm going to show you fresh signals that you can get into before the end of today. And some of them may be shorts, which we really, really need right now. So again, follow the link below. Check out Quantum Indicator at 11 a.m. Eastern Time, just a couple hours from now. And remember, we've got durable goods, GDP, international trades, and we've got so much data today. The market has a lot to process. And don't fall for this banana in the tailpipe with the communication services. They are overbought right now, and they need to cool off. And so does the rest of the tech sector. I think we're going to be going down. Everything is pointing to lower prices. I hate to say that, but it's true. Follow the link below. Learn how Quantum Indicator can help you time the market. Like today, this morning, we got a bunch of short signals, and I'll expose which ones they are in today's 11 a.m. class. 11 o'clock Eastern Time. Don't miss out. It's going to be crucial that you're there. We'll go in there right after my VIP room. I'll see you guys in a couple hours. Take care. Love letters. Post comments in the video section in the YouTube channel, in the Wealth Press YouTube channel. And if you can't find the link to get to the Quantum Indicator, it's in the YouTube Wealth Press channel. I will respond to every post that's there. That's what I do. Love you guys, and I'll talk to you soon. Bye.